Righto, g'day money miners. Welcome back to the week. Geez, shit time to be a mining company. Definitely no shortage of work if you're in the mining news business at the moment. Far out. Liontown debt funding has been taken away. We've got bloody Perseus lobbing a bid for OreCorp over the top of Silvercorp. We've got Wyloo putting operations into care and maintenance. Bit of news out of Chalice and Lynas with quarterlies and reduction in costs, which is good to see, boys.
Mate, it's a jam-packed Monday news day. I heard someone post in the they might have posted in the Hooteroo chat saying, "Is this going to be a 3-hour show?" So let's.
Yeah,
I'm going to aim for better for that one. But mate, beforehand, it's a bloody bloodbath out there.
It is.
Have you seen some of the sell-offs in some of these punter stocks? I mean, like, talk about Liontown. You couldn't really get much bigger of a punter stock than that, given the amazing kind of run that it had in the past. Down 21% today and trading below $1 for the first time in a really long time. And if you're a retail punter, you check your portfolio, you see that. What do? Well, you might read the announcement, and if you're still scratching your head and just a bit bloody bemused, maybe you jump on Hot Copper and see what others are saying. So I jumped on the Liontown Hot Copper today. Here's a couple of highlights I saw in the old Liontown Hot Copper. One person says, let's see what he said at the management briefing at 11 a.m. Let the panic merchants jump ship and listen to what is really happening. Another one says, still valued at almost $3 billion market cap. Wow, board should have sold the joint at $3. Going to get very ugly in here. Greed is an amazing thing. Another one says, the sky is falling. I have accurately paraphrased most of the comments, lol. So some interesting posts there, and safe to say shareholders have heightened emotions while their stocks are so volatile.
Very, very.
They have specific questions about the company that they want management to answer. And Matty, if only there was a better way for shareholders to have their questions answered by management properly.
Well, I reckon there is, because they look at these forums and they're very similar to a heap of people coming out of the pub at 2 a.m. with a gut full of piss out the front, and just everyone's just handbags and haymakers going everywhere, beating the fucking out of each other. But I think a more controlled environment, like what is presented by Investor Hub for MDs and CEOs to harness, because look, this is one component of it, mate. Share registry analytics, shareholders' emails and automation, registry innovation, but the interactive announcements and the Q&A. Because I'll show you an example of something that didn't end up in a punch-up on bloody Hot Copper. Here's the Dreadnought Investor Hub. Bit of a different scale to Liontown, but you can show how it can be done differently. Question was asked by someone, and it was a negative question. Ask them who was shorting the stock and if there was any interest from instos. Obviously frustrated by the recent performance of Dreadnought and rare earth companies. So instead of this going into this Hot Copper punch-up, Dreadnought have replied directly and conveyed that, look, they've also got the shits with the share price because board and management tipped in $3 to the cap raises. Talk about the challenging year for rare earths, how peers have had similar price action. And in regard to the shorting question, they highlight that less than 0.1% is shorted, and highlight that instos have considerably moved out of juniors, implying that there isn't the insto stock available to borrow. So look, it's not a fluff piece, but it's an honest answer direct from management to the shareholder or potential shareholder questions. So look,
you can nip all that speculation at the bud, right? Just ask the MD directly. You don't have to chinwag and waste your time on Hot Copper.
Yep. Mate, if you want access to it, just give old Rory Stein a bloody buzz at InvestHub. His email's in the show notes. They're actually coming to Perth next week. I reckon they'll shout you a beer and a feed if you'd like to get more info on Investor Hub. I'd recommend to hit them up. We like the product. As what Deep Fucking Value says, I like the stock. Righto, boys, let's get into it. Liontown whacked down 20% today. The news came out before market, project and funding update. It's nearly as bad as looking at strategic review in the title. So you knew it wasn't going to be a good one. And they've essentially, what has happened, and JD's going to get right into the bloody guts of it, but the 760 mil facility, the debt package has been terminated. Which was going to pay off the Ford debt. They're now not expanding to 4 million tonne per annum. They're only doing the 3 million tonne case, and they're in discussions to find a revised small debt package. So, JD.
Yeah, so let's cover off a couple other highlights from the one-page announcement that they had. So the $300 million Ford debt facility had already been executed. That is fully drawn as well. The reason the funding got pulled is because there were some terms related to the spodumene price forecast, which are supplied by the consultants Wood Mackenzie, that just, you chuck them into the model and the model doesn't look so good anymore. So that's really the core reason why this has been terminated. The balance sheet has $515 million in cash at the moment, plus of course the 300 debt that we just touched on. And they're still expecting that cash is enough to get them to production by mid this year. So we're expecting later this month a update on the funding, and it was a bit of a half-baked outcome today, because they said the funding has been pulled, but there was no solution, So they're clearly working very hard. They said the news got brought to them late Friday, and I'm sure the guys had a pretty sleepless weekend trying to solve this one. So
I think to clear it up for the money miners out there, the $760 million, it's net debt they require of $460 million, because 300 of that was going to pay off the Ford facility because it had to be the highest ranking debt. So the net debt that has been pulled is $460 million.
Yeah, so it was a really interesting Q&A, and there's some pointed questions on the call today. So let's kind of get through that and trying to draw out what we really found interesting. So there's a few sort of core answers that we are trying to get to. Firstly, how much needs to be spent to get Kathleen Valley to where it needs to be? And I mean, the real question you're driving at here is, do Liontown have enough cash? So like we said, $550 million in cash. That would get them to finishing construction. But they still want a cash buffer, and they'll have working capital needs until they start actually earning money from the thing. Because you don't just hit production and, hit pay dirt. You need to fine tune everything, and you need a substantial buffer. 150 million was the number they wanted to sort of see them through without being, seriously in trouble. So
not like gold where you just take it down to the mint and get your cash straight away. It's a bit more of a process to get it shipped and everything.
Exactly, and they weren't super transparent in how they answered this question. They were asked it pretty pointedly, but they kind of skimmed around it. There was a few numbers that contradicted various other people's responses on the call, so it wasn't totally clear. So I hope when the company comes out with a bit more, answers around this funding, and after they've recut the numbers, because that's something they kept reiterating through the call, that they're recutting the numbers, they're recutting the mine plan, they can come up with a bit more of a solid solution. So
to sum it up, based on what they said in the announcement, the cash they've got at the moment is enough to finish construction and get into first production, but they do need additional debt for a buffer and working capital. Well, we don't know what that number is, but
the big question is how much working capital do you need to see yourself through to positive cash flow? And I think the part of the puzzle there that's a little bit blurry is, well, heck, with spodumene prices this low, how profitable are they going to be, and how long is it going to take them to get profitable with such low prices? Yeah.
And probably the next part is JD, the debt.
Yeah, and the company didn't know the answer to that. There was no sort of beating around that. But on the debt facility, so I touched on why that got cancelled. So the latest lithium pricing has come out from Wood Mackenzie, and it doesn't look great, suffice to say. So the reason why they have substantially lowered their forecast is that they see significant supply growth out of Africa, which we've sort of touched on the fringes, but we haven't really got into great detail in what's happening in certain parts of Africa and that supply coming online. They also expect the lepidolite supply out of China to be sticky, as well as organic growth from existing producers.
What's sticky?
Not going away despite where the sort of prices stick at. So that led us to a price of US $950 a tonne CIF. And, putting that in the model over the first 3 years in particular would imply that the debt coverage ratio is, under substantial stress. And ultimately the banks, the syndicate, weren't happy to wear that sort of risk. So like I said, they advised Liontown late Friday that they couldn't extend the commitment letter. And then Liontown kept reiterating, the banks are very supportive. They're highly supportive. They believe in this project. But clearly the actions, don't reflect the words they're saying. And, you could see Tony and the team really trying to bite their tongue because they need to work with the banks to get some sort of funding package over the line, even if it's smaller and at a higher cost. They were really biting their tongue to not say anything negative about the banks because they need this to go their way, and the negotiations have really only just begun.
So we don't know if that was just called off the bat, we're pulling it, or if there'd been any negotiations in the lead up to last Friday to negotiate a smaller package or not.
That's the question I have, right, is like it's a better strategy to come to market basically saying the lending syndicate weren't prepared to lend us up to $760 million, but they were prepared for us to be less geared with a lower base production case because we're going to have a lower capital commitment and we're only going to get $650 million instead. That would have been a way better strategy rather than the uncertainty and the overhang. And I guess the question is, why didn't they do that?
It appears that strategy was not in their hands.
Yeah. Well, that'd be the assumption, right?
Absolutely.
Yeah.
And then one of the risks that gets baked into the equity price now is, are they going to have to do a raise? Because you would have thought they tried to do, a smaller funding package even at a higher price, and now you run the risk, and hence we see the stock come off over 20% because maybe they do need to go to the equity market, issue more, scrip, and that just wouldn't be pretty at all.
Albemarle is looking more genius by the day.
You can't call Albemarle genius.
Well, if you go off the fact that they pulled out of DD and now they block traded their stake last week before this happened.
Well, if it wasn't for Gina, they would have paid $3.
Or would have they?
Well, I mean, that leads us to question number 3 out of 4 that I've got, and that is, what will Gina do? So a lot of the valuation gets wiped out from moving from 4 million tonnes to 3 million tonnes. So I'll start by saying that. And then, I'm sure we're going to see plenty of downgrades coming from the analyst community. But Liontown were pretty keen to stress that they don't hold the same view as Wood Mackenzie, and they believe lithium prices are going to be higher. Yeah, of course, would say that if you're a lithium company. But they gave the indication that if the right financial backer was there, they would still be looking at 4 million tonnes per annum. So that, of course, leads to the question, who is that alternative funding source? Obviously, the elephant in the room is the major shareholder, Gina Rinehart. So they were asked the question. They didn't, that it wasn't explicit that it was Gina, but obviously they were talking about Gina. And what they said was, in terms of strategic shareholders, we will talk to them following this call so we can give them an update. Now, the update on the front of, I put in $1.2 billion, that's now worth about 400, wouldn't have been so good. But on the other hand, you've got the ability for her to come in at a much stronger position, whether that's through debt, if something seriously adverse were to happen to the company, or alternatively she could come in with another sort of equity financing package at a significantly lower price to what she previously invested in. There will be some people, and I'm sure there's some rumours speculating that why doesn't she just come and buy it all, given that she'd sort of expressed quite a bullish sentiment regarding lithium. There was also the question regarding, would they be running the company that is another corporate process, trying to get a bit of competitive tension going for the financing, but that was a pretty swift one-word no response.
I think that was on the back of some polarising questions.
Yes,
which those one-word answers.
Yeah,
I think Gina, I don't think, and correct me if I'm wrong, I don't think there's been much history of her providing debt, is there, that I can remember?
I can't remember either, maybe.
Who knows?
But here's her options with the debt. She could either, because we know the Ford facility, a condition of that is that it's basically the most senior debt in the stack. So she'd have to come in below that debt and provide a solution on that front, or she could, say offer like $600 million and then pay out the Ford facility on relatively low terms. But then there could be some conditions associated with it which give her maybe potential to get control in a distressed situation. Imagine if you tied your debt to, I've got to be paid out before you raise any more equity. And then what if they hit another funding hurdle? Then all of a sudden she's in a pretty commanding position to get control at attractive price.
So it could bring in the option of a convertible means as well.
Yeah, I think she'd be negotiating from a real point of strength,
Yeah.
So I guess back to the debt, do you think they will get the debt? Like in this, that's the biggest question as well. is would they even get a smaller debt package at the moment in this lithium climate? Would a bank or a lender be comfortable lending out hundreds of millions to a lithium project right now?
I don't think so. And I'll sort of get into why I kind of think that is. So, I mean, the ultimate question I'd ask before that, Maddie, is when will they be cash flow positive? That's what you kind of want to know. And that's what a banker wants to know, in particular in those first few years when they're looking at their sort of repayment schedule, right? Now, they are very focused on pulling down development and sustaining capital, and they also want to bring down their all-in sustaining cost. It'd be very, very hard to bring down that all-in sustaining cost given you're giving up a bit of your economies of scale, moving from 4 million tonnes down to 3 million tonnes per annum.
I think it's still like the way I look at that. Like I look at 3 million tonne as still a very big operation, but there will be some reduction in unit cost. But I'd be interested to know what the difference in operating cost is between the 3 and the 4.
Yeah, I don't think
it's probably written in there. I didn't look for it, but yeah.
Well, they were asked the question, what happens to the unit cost when you move from 4 to 3? They didn't have a specific number.
Answer.
Yeah. So, I mean, there's no guarantee that it necessarily goes down. Then there was the discussion of recoveries, which you touched on there before, Maddie, and, recoveries has a direct flow onto what your revenue is during ramp up. So they haven't updated the market since the 2021 DFS, and the figure was 78%. Now, the key question is how soon do they achieve that? And I was reminded of the McNulty curves, which DK from Terra first brought to us half a year ago. So
we've been living by them ever since, DK, just letting you know, mate.
So we'll flash it up on YouTube for those wondering what we're talking about here.
They were referred to on the call today, weren't they?
Yeah, they were. So the key question is, when do you get to 100% of your designed plant output? And it really matters in mineral processing, and you tend to follow one of 4 different curve types, type 1 being the best, and that tends to be associated with companies that have mature technologies with thorough testing having been done. So the direct implications are on your payback period, not to mention your debt coverage ratios, as well as being a result of your cash balance. So I think it's worth reminding ourselves that lithium processing isn't the most simple. There's not really a producer that comes to mind that got there super smoothly in Australia.
And they're not using it's not a carbon copy of Pilgangora or anything, DMS to float. Like this is whole of all flotation. So there's a lot of expertise in the business, but it is still a big plant that is unique in a way because it's just flotation. So,
and the company sort of reinforced this in a way today. They had a couple of words saying the things like, I think we'll get to 78% recoveries, but when do we get there is the question. And then they added, we'll provide answers closer to the date about when we anticipate we'll get there. So there's a couple of question marks around continuous disclosure, given they seem to have some internal recovery figures. But we'll move on to the sort of numbers around cash cost. They, again, spoke about a $650 cash cost in Aussie dollar terms as a 10-year average. So they flagged that the first few years will not be this cheap. And then, you got $170 in sustaining costs per tonne, which, again, they're being reviewed. But that doesn't even, bring into account the royalties and interest payments and those sorts of things. So that leads me to my long-winded response to your question, Maddie. Will a bank get comfortable with providing the financing? And it could be pretty touch and go at these sorts of lithium prices.
I think the risk profile for a bank is very different to an equity proposition, and a bank might be able to take a bit more of a bold position on it. It's just because they've got security, but and you saw the lender group that came to market in that first syndicate, and they were ultimately pretty high. Like they were quite credible institutions that looked like they weren't vulture lenders or anything like that. From a sense, so there might be other types of lenders or other financing techniques. There might be some convertible structuring that could be done to a different sort of profile of lender or financier, which might be more doable given the cash flow dynamics you point to, but it might not necessarily be the appetite of those grade A kind of commercial lenders.
Yeah, I think one way or another they get the financing. It's just about what sort of what's the shape it eventually takes.
Yeah.
So especially if they are worst case scenarios that they're raising at 70 to 80 cents via equity. Would you ever think 2-3 months ago that we'd be talking about something like that after the three, even when they raised it, what, $1.50?
Yeah, I'm sure they.
$1.80.
I'm sure
$1.80 it was.
I'm sure the company would argue that wouldn't happen, and that there are plenty of other more attractive options. But you never know, right? Like, we've been pretty thrown by the lithium market dynamics and just the start of this year. It's been pretty wild.
Yeah, and it's happened very quickly. Alan Trench's comment, golden rule, one of the golden rules, don't catch a falling knife. No one can ever. How many times have you heard companies and people say, "Oh, we thought it was the bottom then"? So let's hope that we are close to it.
Yeah, it's a fascinating one to watch. So any other sort of closing thoughts from you guys on Liontown?
Well, I guess you look at how this company, the journey of this company. I know the Albemarle bid getting pulled and having to do that raise was, probably a first bit of stress, but this is the first real piece of stress that this company is under, like really getting questioned about what their direction is, because they've always had, funding thrown at it, like Ford threw them the funding. They got that massive facility signed in the process last year, but now that's been pulled. Like they're at a point now that they've never been at in their company journey, like in the development journey of like really being under pressure. So it's going to be interesting to see how they handle it and how they come out of it.
Absolutely, mate. Should we crack into some hostile M&A?
Yes, well, this one's come out mid this morning, so we've covered it a bit already. The OreCorp Silvercorp deal that is in progress, but Perseus have now come in with a bit of a hostile approach, intention to buy OreCorp at 55 cents, all cash.
That's it, guys. I get excited when I see a little bit of hostile M&A. It really gets me pumped up. So
this would normally be the head story, but there's like 4 head stories in this thing. God,
jeez, it's a big one, isn't it?
Right.
A few hours into market trading today, we had this exciting development I'm going to call it the battle for Nyanzaga.
How fitting.
There's always a battle for a gold asset, isn't there? Perseus, they've dropped an ASX release titled "Intention to Make Takeover Bid for OreCorp." And if you're not up to date on this one, I'll first give the brief background to the money miners. 6 months ago, I think it was at Diggers, OreCorp announced a recommended tie-up with Silvercorp via a scheme of arrangement, and Silvercorp simultaneously bought 15% interest in OreCorp via a placement, and that gave them a position to hopefully defer pesky interlopers from getting in the way of this agreed deal, Matt and JD. A few months later in November, we saw some reporting in the Australian Financial Review that some high-profile shareholders of OreCorp, namely Tim Goyder and Nick Georgetta, were seemingly not stoked with the deal anymore, given Silvercorp's share price had substantially sold off, and much of the consideration in the agreed deal was to be in Silvercorp shares. Shortly after that article, Silvercorp and OreCorp agreed to an uplift in consideration, specifically the cash component of the consideration by 4 cents Aussie per OreCorp share. This uplift was enough for those high-profile shareholders to quieten up. They signed intention statements for the new deal terms. Happy days. And 4 days later, Perseus buys a big bloody stake in OreCorp, 19.9% they picked up, and that was surely enough to block the proposed scheme of arrangement with Silvercorp. With the scheme meeting scheduled in early December and zero probability of it passing thanks to Perseus, OreCorp postponed the meeting, and the deal becomes a takeover instead of a scheme of arrangement on the 27th of December, recommended by the board. The terms, however, were the same as the scheme. Each OreCorp share would get 19 cents Aussie in cash plus 0.0967 Silvercorp shares. And then Thursday last week, OreCorp say that they have read reporting in Tanzanian media that Perseus have met with Tanzanian officials, but they said Perseus have not submitted an offer yet. Which brings us to today.
So it all happened the day after. Because this one says they got the offer approach Friday, which is day after Thursday. So much can happen in 24 hours. Right, so Trav, what's the big event today? Take us through it.
Mate, Perseus, they dropped this 7-page announcement to the market declaring their intention to bid 55 cents for OreCorp. And there's a bit to unpack here in this release. The 2 big takeaways for me are, number one, the messaging in this announcement is very focused on persuading the reader that this offer is superior to Silvercorp's offer on value grounds specifically. And number two, the manner in which this announcement has been released to me indicates that Perseus probably got knocked back by the board of OreCorp when taking this proposal to them first. I'm going to unpack that.
And while you do unpack it, I'll just show the chart and why you look at the Silvercorp share price for the last 3 years and you can see why the scrip is a big factor in this because it has been on a decline. They mine silver, lead and zinc in China, impacted by COVID. Lead and zinc prices have fallen. So this is where the cash versus scrip thing will come into play. So Trav,
Matty,
go take me on your journey, sunshine.
I'll start with the first one. Does this offer look like a superior offer to me or not? And there are 3 areas I look at to assess this, if it's a superior offer. Those 3 are value, conditionality, and timeliness. So number one, on value or price, it's obviously the most important factor. Something superior, well, I'm going to get paid more or not. That's a pretty bloody big part of the equation if it's superior or not. Perseus, in their announcement today, they highlight that their 55-cent offer is a 4% premium to the value of OreCorp bid at last close, and they kindly include a table comparing the offer to some short-dated VWAPs or volume-weighted average prices over different periods, all which come in at about a 2 to 4% premium.
Keyword short-dated.
Who would have thought they put in data that makes their deal look better?
Oh, we've seen it all before, boys.
I think Perseus, they've been a bit cheeky here by only including a maximum 10-day VWAP to compare it to. So I decided to look at the data myself and calculate VWAPs that capture all days from the last adjustment to the deal, which was the 27th of December. So on the 27th is when it became a takeover instead of a scheme of arrangement. So I thought, look, I feel like that's a decent starting point to actually, measure a VWAP inclusive of all days.
Do you regret that decision in any way, Trav?
I just regret trying to calculate a VWAP in the first place.
Let alone when you got exchange rates and 4 different exchanges to go off.
Oh, exactly, mate. It's it's pretty annoying VWAP to back out because there are 4 listings of Silvercorp on the NYSE American, which by the way is not the NYSE, the TSX, the LSE, and Deutsche Börse, which I'd never heard of. But most of that daily volume, however, is on the NYSE American. And look, there've been 16 trading days since the deal became a takeover. The VWAP of those 16 days to the 19th of Jan is 31.756 Canadian cents. Convert that to Aussie dollars, multiply it by 0.0967 shares plus the Aussie 19-cent cash component, and we get a value. And here it is. This is the value I come up with: 0.5483 Aussie dollars. Which is pretty damn similar to the cash value from Perseus.
So that'd be a 0.something% premium.
Pretty
bloody close.
I say value from an academic perspective is very similar.
You could not get more similar, Trav. That's a rounding error.
Technically,
good. Hey, just full compliments on the calcs because I know that wasn't a bloody easy task. But money miners, you just sit back and enjoy the benefits of Ricciardo's hours of work.
Oh, no worries, mate.
Yeah.
Anytime for the money miners. The big factor here comes down, however, not to that very academic precise number, but it's more about what consideration do OreCorp shareholders want? Do they want cash, or do they want cash and some Silvercorp shares? There's pros and cons to both, and I doubt all shareholders will look at this in the exact same way. On the pro cash only side of the equation, Silvercorp scrip isn't super liquid, and how much volume would there even be for a CDI on the ASX? Would Silvercorp potentially have to dilute their shareholders further to fund development of Nyanzaga? And what does it mean for the value of Silvercorp scrip if they did? And then on the other hand, there are likely tax advantages to OreCorp shareholders receiving Silvercorp scrip via capital gains tax rollover relief if you have the minimum threshold of acceptances received. So depending what kind of shareholder you are, if you're tax conscious or if you want something liquid, then you might actually have a different view on which one you want there.
So if you're saying that if you're Tim Goyder as a shareholder, you might find it very difficult to sell the shares to make up for what you're losing on Liontown. If
that were a consideration, potentially.
Yes, as a major shareholder.
You've also got a couple other sort of factors that come into mind, then price being the main one. But we, when we really got into the battle of Leonora, we got into all the other factors that play a role, the timeline, the conditionality, all these sorts of ones. So I'm sure you've fleshed out your thoughts on all these.
Yep.
Take us through, let's start with conditionality.
I agree with Perseus' assertion that their proposed bid has similar conditionality to Silvercorp's. It's conditional on acquiring 50.1% of OreCorp shares. It's not subject to DD or subject to financing or anything like that, which presents real deal risk. And then on the timeline factor there, like given the Silvercorp deal is already open, they've been through the regulatory approval process already for the scheme, noting they need it again now that it's a takeover. But I think a Silvercorp deal would complete sooner than a Perseus deal, but it's not like that really matters too much in this situation. You mentioned the battle for Leonora, and timeliness was a big consideration then because St. Barbara had debt, they were bleeding cash, and they needed money in the door ASAP to prevent having to dilute their shareholders further. But in this case, timeliness is pretty marginal. It's not really it doesn't really impact the whole piece of superiority or not in my mind. So
what's the outcome there, mate? What did you come to the,
is it
the
superior?
view of?
Yeah. I'd say yes, just.
So the Perseus deal is, in your opinion, superior to the Silvercorp one?
Yeah, it all just depends if you want cash or Silvercorp script. Personally,
Yeah.
I'd take the cash from Perseus on this one.
All right, and you mentioned hostile at the end. Obviously, the way this has come about, Perseus just chucked it up on their announcements page, probably related to the no talk, no shop sort of conditions around this.
Seems like that to me. Like this announcement is what you'd upload if you went to the board of OreCorp with your bid, and they said, we can't talk to you under our no shop, no talk with Silvercorp because this bid is not capable of being superior. So then what is Perseus' strategy to do in that situation? Well, they think it is. So they drop this bid to market themselves rather than having some joint statement going out. And if my read is right there, then it makes sense for Perseus to go public with that bid and put pressure on the OreCorp board to engage. What happens next will be fascinating. Will the board come to the party or will they play a straight bat? I think some of OreCorp's largest shareholders could have some influence in that decision. Like we mentioned, Tim Gorda is one of those, and maybe some cash would be optimal for him given the beating he's got from Liontown today.
And Chalice in recent times.
Yep. And I think the most likely outcome of all this is Perseus upping the offer a tad and OreCorp deeming it superior. Some other thoughts too. There's a break fee payable to Silvercorp if a superior proposal completes, and there's also a matching right to Silvercorp in all of this too. So let's see how that one unfolds.
Alrighty, so we've got one more question to answer, and it's a question we asked last week already on this exact stock, and that is, should Perseus even be bidding for OreCorp?
I think that's an interesting question, right? I tweeted the Perseus announcement when it came up on ASX, and this is the first comment I got. Do you think there's some grand appeal in that asset that's not so obvious, or is it a lack of big enough and good enough projects on the market? I think the answer to this is the latter. Now, don't get me wrong, I agree Nyanzaga is an attractive ore body. It's the 16% government free carry plus the pretty chunky royalties on top that make it pretty unexciting from an equity perspective in my mind. And clearly Perseus have looked everywhere and decided that Nyanzaga is the best they can get after the Maya Sands has been paused. And I think that's a bit disappointing. I looked at what the brokers are saying about Nyanzaga. Canaccord valued the project at NPV Aussie 337 million. Bell Potter come up with NPV 12% discount rate at $252 million Aussie. And Perseus's offer today values OreCorp at Aussie 258 million. So on those numbers, you'd be paying anywhere between 0.76 times NAV and 1 times NAV, depending on whose assumptions for the value of Nyanzaga you use there. Now, that's pretty fully valued for an undeveloped project to be paying, as high as 1 times NAV for it. Perseus's history is growth by M&A. They buy undeveloped projects for peanuts, they build mines, and they've outperformed from great execution doing just that. I'm going to argue that Perseus should look beyond this strategy that has rewarded them so well today, M&A. And I'm going to advocate they think about doing something else with their cash that they are printing. You ready for it? I think Perseus should buy back their own stock here.
There we go.
There we go. Heard that last week.
Why buy OreCorp for, call it 0.9 times NAV when you're trading yourself at 0.71 times NAV? Maybe Nine Zargo's worth 200 odd million, but remember, OreCorp would still have to build the mine, where all the risk of execution, ramp up, etc., on top of just the acquisition price too. And they don't have an existing mine in Tanzania, so there's plenty of risk around all of that. I want to advocate Perseus to buy back their own stock. Surely at 0.71 times NAV, Perseus is more undervalued than OreCorp, right? And the last point I want to make is kind of tying it all back a bit thematically. Gold miners historically don't have the best track record of sustained shareholder returns over the long term. And I'm talking the global gold miners out there, the big gold miners. And I think like rounded capital management discipline is required for the gold miners to build a better reputation in this regard. I hope Perseus becomes a market leader here. Sometimes M&A isn't the most accretive thing you can do with your cash.
Because if you leverage to the gold price either way, if the gold price goes up, they make more out of Nyanzaga, it's worth more. But if they buy back their stock and the gold price goes up, their share price will go up.
Couldn't agree more with that point. Matty, you found out one very juicy fact as well in your research for Silvercorp.
Oh, check this out. Do you know that Silvercorp have the GC mine?
I did not know that.
Have a look at it. That is bloody brilliant. Right down in the south, just north of Hong Kong. Any listeners in Hong Kong, get in your car if you got one. You probably haven't got one in Hong Kong. Take a good drive up the countryside and check out the GC mine and tell them we all say good day from Money and Mine.
It's unfortunate GC stands for Jiaocheng there. Never mind that fact.
Don't worry about that. Minor detail, JD.
That's what we think it means.
Yeah. Spot on, mate. Spot on.
Hey, what a cue from the Let's Eat Lunch bar that I've had to give notice that I'm going on the shakes and I won't be buying banh mi's every day. I broke the news to him. He said, I just found out what GC stands for. He says, I've been calling Ali a GC the whole time. I feel bad now. Anyway, right, other big news out today to add to the big news we've already talked about. Twiggy Forests, Wyloo, putting nickel operations on care and maintenance. That's the Cassini and Kambalda North operations. They'll go into care and maintenance from 31st of May. So that's obviously resulting from the decline in nickel prices that we've seen. So they had to give 6 months notice. So that's why May 31st and not now. So if we
6 months notice to BHP?
So 6 months notice to BHP.
Gotcha.
That to terminate that offtake. So to put it on hold, you'd say. So look, as we said, Wyloo paid $760 for Mincor 6 months ago, and look, and BHP turned back on the Kambalda concentrator to process that ore. So look, lots happened, and then we're on the other unfortunate end of it at the moment. So why is nickel down?
Yeah.
Obviously, so much supplies come online from these Class 2 nickel laterites in Indonesia. They produce shitloads more nickel than a Class 1 sulphide mine can in Australia. And Twiggy calls this Indonesian stuff dirty nickel because it involves a lot of deforestation, tailings being dumped in the ocean, poor workplace standards. So this premium price for mining a more ESG-friendly Class 1 nickel sulphide, it just isn't here yet. We've talked about it for ages. Scuttlebutt going around that there were small instances of it, but essentially it is not here yet. And this is, I guess, driving it. And you can see by the nickel price what the go is. So,
So Matty, you said 6 months is, they must have made the decision, a short while ago. They got 6 months left, and then they had this contract with BHP.
Yeah, so the offtake to the Kambalda concentrator with BHP. So they're from when they go into care and maintenance at the end of May, there will be 18 months remaining on that contract. So it ends in December 2025. So I guess since Wyloo are at the mercy of BHP for this offtake in terms of the payabilities and everything, this would be seen as the cheapest way they could probably get out of that contract without continuing to deplete their reserve by mining it.
And this would have been the contract that Mincor signed 3 or 4 years ago now. Assumed that contract.
That come with the car, that one. So, but there's just so much flow-on effects for this. So I'm going to go through a bit of the whole nickel landscape. I know I talked about it last year and we talk about it a lot, but I guess understand the flow-on effects or go into a bit of detail.
Tell me, matey.
Obviously, job losses is the big one that's just horrible to see. And they did mention in the announcement, which is good to see, that FMG will look to assist with getting jobs for the 220 contractors that are being stood down from June onwards. So that's, I guess, one benefit that iron ore's going well. Because AFR's Brad Thompson, he quoted today in his article that 1,000 jobs in WA nickel have now been lost since the start of December last month. And look, BHP employs 2,500 people in nickel through WA in the operations and the downstream. So they mentioned last week they're doing reviews and possible write-downs there. So look, very stressful times for those employees seeing this happen all around them. So thoughts are with all them. Stay safe underground and on the surface there, everyone. So just a bit of a refresher on that BHP downstream landscape, because they've got the Kalgoorlie smelter. That's the intermediate step that produces that 66% nickel matte.
Yep.
Some of that's exported. The remainder of it's sent to BHP's Kwinana refinery to produce the briquettes, the powder, and then also the nickel sulfate on that bolt-on plant. I guess, what is the impact of Wyloo's decision today to go into care and maintenance? What's the impact of that on BHP?
That's the big question, right?
That is the big question.
Yeah.
And the overall thing, that Kambalda North and Cassini ore of Wyloo's it's pretty bloody important to BHP. It gives them extra feed for that Kalgoorlie smelter. The disregard the Kambalda concentrator. That was purely turned on for BHP wouldn't want to run that. That was turned on just for the Mincor ore.
Yeah.
So that's totally separate, but the smelter is where it's important. So it's the Wyloo ore has the higher iron content. It's also known as that, the Fe-MgO ratio in concentrate. So iron to manganese, FEMGO. Or I call it FEMGO. I don't know if I made that up, but it's FEMGO.
I've run with it ever since.
It's FEMGO.
Yeah.
And it's important to have that ratio high because it maintains the high temperature in the smelter. So the slag has the appropriate viscosity, so it doesn't build up in the furnace and require constant bloody refurb. If the heat isn't high enough, it obviously bloody sticks and she's a big ball of fuck, and you don't want that.
Yeah.
So
it matters for the rest of the ore to be blended with it.
Yeah. So you got because BHP's Leinster and Mount Keith ores, so that's what BHP's feed. They have a much lower iron content, a much lower FEMGO ratio in the concentrate. So because that Kalgoorlie smelter was built back in the day originally for the Kambalda style ores, and it can run at a minimum of iron MgO ratio of 5. Like Kambalda ores, can be double digits plus. So the Mount Keith concentrates, I'll show you how all the blend works, how it all works together. So they've got to have a minimum of 5 going through that smelter.
Yep.
The Mount Keith concentrate, that averages a FEMGO of 1.5 to 2.5. That's the bulk of the ore from BHP. So that produces that's an 18% nickel grade, that concentrate. Leinster, the FEMGO for the Leinster ore is 10. So remember the minimums. So Mount Keith's a lot lower. Leinster is 10, but it's an 8% nickel concentrate. So in Mount Keith's 18. So I think they get the iron content higher by reducing the concentrate grade. So BHP blend all that together to make their con that they contribute around a FEMGO of 4 at 13% nickel grade. So it's below that 5% FEMGO of 5 that they need to run the smelter. Then the Kambalda concentrator, which is the one they turned on back on for Mincor, I think they get I think they might get some stuff from Beta Hunt as well, but majority of it is Wyloo ore. That averages a FEMGO of between 8 and 15 at around a 13% concentrate grade. So concentrate grades are similar, but the Wyloo ore concentrate
Much
out
higher
of
FEMGO.
adds the extra iron to get it up to that minimum 5 level. So, because BHP, they've got plans to upgrade that Kalgoorlie smelter in 2026 so that it
They
can.
haven't pulled the trigger on that yet, have they?
That was the talk. That was that critical point where offtakes are finishing, Nova's finishing, and they're going to have to upgrade it so it can operate at higher temperatures whilst running a lower FEMGO ratio. But the question is, will this still happen? We don't know, and we'll ask that later.
So they spoke about the structural changes in nickel, and they said
Yeah.
they're going to make a further comment next month with their half-year result.
Yes, and it looks like that, and we'll get to why that maybe this might be the straw that breaks the camel's back for BHP, because that is the flow-on effect of that expansion is needed to be. It's like they can't run the smelter without that ore. They probably could, but it's going to be very difficult. Now the arsenic. We talk about the arsenic. You all remember there was that out of spec ore issue with when they were Wyloo were taking over Mincor and then attempting to, then BHP wouldn't accept some of the Cassini ore due to the higher level of arsenic.
I remember that. Yeah.
Yeah, so that was like the gift that BHP sort of gave Wyloo because that put them at best and final.
Yep.
Because the arsenic coming out of Mount Keith is apparently very high also. So they look to blend that down with, I think the Leinster ore's lower, but Wyloo's northern operations, Kambalda North, that has bugger all arsenic. So I imagine when they get a parcel of Wyloo's concentrate that is a majority of the Kambalda North ore, they'd bloody love it because it blends down all the arsenic coming out of Mount Keith. Obviously Cassini would lift it back up a bit. So that's obviously going to hurt them as well, that extra bit of low arsenic ore. So
And why do you say it's going to be the straw that breaks the camel's back, Matty?
well, last week before this announcement, they were discussing write-downs and reviews, and obviously the lack of that Wyloo ore will that see them unfortunately bite the bullet on doing something similar to what we've seen Wyloo do across their whole Nickel West business because it's all linked.
I imagine they're losing plenty of money every single month at their Nickel West business. I find it hard to believe that would be a palatable situation to BHP, given their focus on returns on capital.
Yeah,
right?
exactly. And I guess at what point does it become the price on the social obligation is just outweighed by how much money you are losing?
Yeah, there's two. I think, well, maybe more than two. There might be three things they're really weighing up, I reckon. One would be, is BHP actively evaluating opportunities to divest this whole business, which I imagine they would be, but it'd be hard to find a buyer who, willingly take on the big rehab that's there. Another thing to factor in is, are they realistically going to pull the trigger on a $1.5 billion expansion that Kambalda needs when they're forecast to keep losing a lot of money? I find that pretty hard to believe that they would do that.
Yeah, for the Kalgoorlie smelter.
Yeah. And then another thing too is because the smelter has a massive, we're talking in the billions, rehab liability associated with it, to make a decision we're going to chuck it all in care and maintenance or whatever, it's a hard decision to make because you have to realise that rehab sort of starting soon. So sometimes it just makes sense to keep things running at a loss, but try and minimise that loss just because you don't have to realise the rehab sort of in the near term.
I think we can conclude overall the longer term view that Wyloo want to break away from BHP. Yeah. At the moment they're hamstrung by that relationship to the smelter. Because Andrew Forrest, the mining magnate, he would not in his lifetime want to be in long-term business with BHP. That's just would not be in his wheelhouse. They've said they want to build their own concentrator, in and around Kambalda. They don't want to have to use BHP's. They originally had plans to build the downstream facility in Kwinana in a JV with IGO, which, as you can see by this pic, that takes the concentrate and runs it straight through this process to produce precursor cathode active material for batteries. So it bypasses the BHP Kalgoorlie smelter. So look, their initial scope was to send all the nickel and cobalt concentrates from IGO, Wyloo, other third parties to this Kwinana facility if it got built. That produces this nickel cobalt sulfate in solution. So add some manganese sulfate, then you create this powdered NMC PCAM that goes. That's what you mix that with lithium hydroxide, lithium carbonate. That's what converts it to CAM. That's it goes in the batteries. So that's the sort of way they were going. So it goes a step beyond what BHP does with their sulfate plant. They just produce the blue nickel sulfate crystals. So it's sort of a step past that. So they've got a base case to make that work if things came back online between Cosmos and the Wyloo dirt, because Cosmos, I think I would anticipate there will be more news coming out of IGO and Cosmos with what that operation's doing. But they're definitely looking to get more feed in. And I don't see this isn't Wyloo shutting up shop on nickel, I don't think, at all. I think there's a lot of things that have to happen first, but before we even start talking about a restart and potentially a blood downstream facility like Class 1 nickel pricing bifurcation of some sorts, nickel price recovery. But I think in this distressed nickel climate, if Twiggy, I assume he still has his long-term nickel mandate, I think he doesn't want to finish his time as a mining magnate being remembered for Anaconda. He wants to make nickel work. I reckon Wyloo might start becoming very active again on the M&A front.
They're pretty
Maybe they're the buyer for Nickel West.
That's a big call.
That'd be a big call.
There's one other.
God, if they're going to sell it to anyone, that'd be the only person that'd buy it, I reckon.
Oh, jeez, I don't reckon that even they would buy it. Yeah, nah.
There's one other comment to make, Matty, and we won't go into it in a big way here, but you spoke about the supply coming online from Indonesia in nickel, but the other side of the case for prices there is that demand has come off. So obviously the majority of nickel still goes toward stainless steel, but there is also an argument you could make for NMC batteries not being the winning technology. And when all this nickel, was, put into, when all the capital was sunk into these nickel projects, they were expecting substantial growth in demand as well coming from this battery side. But LFP batteries have
just taken off.
They've taken off, and we spoke about all the supply coming on from Indonesia, but I'm sure they're not all creaming it either. This isn't a nickel price that they're loving either, despite it hurting the more fringe players like what we have here in Western Australia. It's going to be hurting a lot of them up in Indonesia too.
Yeah, very much so. Right, boys. Chalice come out with a bit of an update today about tightening their spend, which is what we like to see for a developer not developing.
Yeah, kudos to them for that.
They're indicating they're tightening their spend from $5 million per month to $3 million per month with the tough market conditions.
Is that still pretty high? Or is that total expenditure?
Yeah, I think it was total, but it's I mean, I'm sure you could run things even leaner if you wanted to, but anyway,
absolutely, that's a lot of bloody money. That's $36 million a year for an exploration/development company.
In the still doing a DFS. So
yeah,
but yeah, in the 5 months.
Geez, wouldn't mind being a mining consultant if that's the case.
In the 5 months since they put their scoping study to the market, the share price has fallen from $5 to $1 today, an 80% fall, and 6% of that came today.
Yep.
All in all, we do commend Chalice for rationalising costs here. I think in our segment last week on Rex, our views are pretty strong on this point. If your project is basically an out-of-the-money call option on commodity prices, we think you should do everything to minimise expenditure until there's a structural shift in said markets. So, yeah, bloody just dial back the expenditure and hope the commodity price shifts in your favour, and then your the option dynamics play out.
Here's a dartboard throw for me. If Wyloo are getting active, if Twiggy believes in nickel so much, and the hydrogen mandate, he loves his hydrogen. The palladium at Chalice, do you reckon Chalice might be in his sights?
I think we fleshed out the case that this is not really a nickel mine quite well when we spoke about it last.
You get a bit of nickel, you get a bit of platinum, a bit of palladium, copper. Just keep everyone happy.
Great for a catalytic converter.
I'd take the other side of Wyloo getting active. I think, I'd say, look, they've got, like it's a pretty big haircut to take on the Kambalda ops at the moment, so it's a bold position to get pretty active again on the other side.
When you're taking cancelling operations, the
big swing factor though is Twiggy's dividends are printing again, so he can maybe start swinging some more shots, and maybe some of that goes to Wyloo.
Yeah. Right, Lynas come out with their quarterly today. We covered them last week, and we're in keen anticipation for this one, but I would say a very number light announcement. Not many specific numbers that we were looking for.
I think it was pretty info light in general. And you see they did the same trick as Evolution. You know, you come out with Mount Weld exploration drilling program successfully completed, and then the quarterly. So not fooling anyone. Page 7 had a couple of lines that stood out. The rest was, you know, not all that interesting bar the closing cash position. But, I mean, on the cash position, you could see that the burn had accelerated, that substantial capital works, $216 million change in final cash from the previous quarter. So down from 900 and a bit to 680, give or take.
A lot of that for Kalgoorlie.
Yeah, and
Malaysia as well.
Malaysia was down on a shutdown for the majority of December as well.
Maintenance and capital works going on there as well.
Yeah.
Well, and on that episode on Wednesday last week, we reported what we believe to have been a scoop on Lynas, that they'd largely demobilised construction contractors at the Kalgoorlie facility prematurely. So I opened this quarterly expecting to see some admission of a change in strategy with respect to their Kalgoorlie facility. And I was shocked to see nothing to that effect in the quarterly. In fact, they still proclaim to be on track to be producing MREC out of Kalgoorlie by end of March quarter.
I think the exact words, it didn't say it is completed. It said it was mostly
largely constructed and commissioning activities underway from memory, but we'll flash it up now for the viewer to get the exact words. So we all dialed into the analyst briefing to see if there would be any more colour on this, and we got this. Amanda Lakazi talked about the variation to the operating licence in Malaysia, as we discussed last week. Recall the Kalgoorlie plant is a cracking and leaching facility, and you know, in this quarterly we see that Lynas spent some capital on the cracking and leaching facility in Malaysia this quarter now that the licence was extended too. And she said this, we'll play the snip.
2 people paying the invoices maybe.
We also undertook significant works in our cracking and leaching and OUR areas, both on ongoing maintenance, but also some enhancements in operations, given that we now have extended operation of those facilities.
There it is. Not worthy of putting in the quarterly. One of the analysts asked Amanda if there have been any challenges with processing Mount Weld concentrate at the Kalgoorlie plant so far. It's worth listening to, so I'll play that one as well.
I'm just wondering, Kalgoorlie has started processing the concentrate from Mount Weld at the end of last year. Any challenges have, since it started?
Yes.
Are you expecting? Are you expecting any technical challenges from for processing the carbonate for the rest of the year when you send the Kalgoorlie carbonate to Malaysia? Thank you.
Okay, so yes, there are challenges. Stop press. We've got a big, complicated new plant, and there's some challenges. And we certainly have been, as we introduced feed. I mean, of course, this actually showed us areas. There was all of our team had a sort of hypothesis on where we might face those challenges. Well, you don't know until that's all theory until you actually introduce the material. So there are some areas where we're improving, and like with any startup, you start it up, you shut it down, you start it up, you shut it down, and do some further works and all of those sorts of things.
If I were a betting man, based on the reports we've had, and as we've discussed with the money miners, I'd be betting on more of the shutting down than the starting up versus expectations currently in the market out there. The key questions I would have for Lynas management would be this, Maddie and JD. Number one, what percentage of the Kalgoorlie construction capex has been sunk and how much is still remaining? Number two, did construction activities prematurely cease in November last year? Number three, how advanced are commissioning activities in Kalgoorlie precisely? Number 4, do you actually intend to produce mixed rare earth carbonate from Kalgoorlie in any commercial quantities in the near term now that the Malaysian licence has been varied?
It's really over that next 3-year period. And it's unfortunate because they're very similar to the questions we, said last Thursday, I believe, and they didn't really get answered. They were experts at talking in and around questions and talking and not answering any questions at all. So I wouldn't recommend going and listening to that one because there wasn't an awful lot of substance to it, in my opinion.
Yeah, and I think, look, if they've had to deploy some capital at Malaysia to, I guess, bulletproof the business during ramp up and commissioning and teething issues of Kalgoorlie, so be it. Like, just say that.
100%.
Like, it's just so... Yeah, all over the shop. We just want information.
Yeah, I think it's more like the whole market does believe Kalgoorlie is going to be a higher cost basis than
I heard
cracking and leaching
30% higher operating cost. That was the number that someone gave me. Yeah,
I'm just curious if there's already a decision been made from a cost perspective, allocation of resources that doesn't necessarily read through in that quarterly.
But why wouldn't, like, if that is the case? It is a good thing. Like, that is like, you've got the potential to have lower operating costs for the next few years until the license runs out. Like, that's a good thing.
It's a puzzling one to me. And I think the last rounding out comment would be that demand for NdPr was, quite weak. They were pointing at the weak property market in China and looking for pickups in that. And then you've got all this, info coming out about wind turbines and so on. So the outlook for the commodity was rather soft, and obviously they're looking for a turnaround on that front too.
Very good. Oh, geez, I'm bloody rooted after that. That was a big day. God, there's no bludgeon here at Money and Mine Studio, I can tell you that much. Thanks to Investor Hub at the top of the show. Boys are in town next week. Give us a buzz if you want to catch up with them. DSI Underground, Terra Capital, McMahon Mining Title Services, Benny Swan of Future Proof Consulting, Anytime Exploration Services, KCA, Site Services, Brooks Airways, and K-Drill.
Hooteroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.